meeting number 20 of the House of Commons Special Committee on the Canada-People's Republic of China relationship. Pursuant to the order of reference of May 16, 2022, the committee's meeting on its study of the Canada-People's Republic of China relations with a focus on investment funds. I'd like to take a few moments for the benefit of the witnesses and members. Today's meeting is taking place in a hybrid format pursuant to the House Order of June 23, 2022. Members are attending in person in the room and remotely using the Zoom application. There's a few comments to be made for the benefit of the witnesses and members. Please wait until I recognize you by name before speaking. For those participating by video conference, click on the microphone icon to activate your mic, and please mute yourself when you're not speaking. There's interpretation for those on Zoom, of course, at the bottom of the screen of either floor, English, or French. And for those in the room, you can use the earpiece and select the desired channel. A reminder that all comments should be addressed through the chair. For members in the room, if you wish to speak, please raise your hand. If you're on Zoom, please use the raised hand function. The clerk and I will manage the speaking order as best we can, and we appreciate your patience and understanding in this regard. In accordance with the committee's routine motion concerning connection tests for witnesses, I'm informing the committee that all, witnesses are here, and Mr. Cormier has gone through the test, so we're all good there. For members here, I want to just post that we will be taking the last 15 minutes of tonight's session for committee business. Because of the number of people who are here to give us testimony, your help in keeping to time and your comments and questions would be appreciated. I, of course, will be helpful in that regard as necessary. We have some guests joining us. Randy Hoback for MP Michael Chong, MP Ed Fast, the Honourable Ed Fast for MP Tom Kamich. Let's see, we have Arnold Viersen for MP Raquel Dancho, and later on Mr. Janus will be joining us. And on the Liberal side, Mr. Majid Johari for MP Emmanuel Dubourg. So now we'd like to welcome our witnesses for our first panel. We'll have witnesses for the Canada Pension Plan Investment Board, Michel Leduc, Senior Managing Director and Global Head, Public and Corporate Affairs. For Caisse de Dépôt de Placement de Québec, Vincent Delisle, Senior Vice President and Head of Liquid Markets. Philippe Batani, Vice President, Communication and Public Affairs. And for the Public Sector Pension Investment Board, Edward Van Gelderen, Senior Vice President and Chief Investment Officer. So each organization will have up to 5 minutes to deliver opening remarks, and we'll start with you, Monsieur Leduc, for 5 minutes or less.
Good evening, Mr. Chair and members of the committee. J'aimerais remercier le comité de son invitation.
I'd like to thank the committee for the invitation. I appreciate the opportunity to answer questions about our investment strategy.
The Professional Investment Management Organization that invests CPP funds not currently needed to pay benefits. Our purpose is to help provide a foundation upon which more than 21 million contributors and beneficiaries can build lifetime financial security. Our enabling legislation has very clear objectives: to achieve a maximum rate of return without taking any excessive risk, while also considering the factors affecting the overall funding of the Canada Pension Plan. A professional board of directors oversees the management of the enterprise. Assets are segregated from government funds and managed with a singular goal: to repay our contributors with their earned benefits today and for many decades to come. The fund is composed of only two things: payroll contributions and net investment income. Assets of the fund now exceed $500 billion. Of that total, over $370 billion is from our investment operations. Canada stands out as one of the very few countries worldwide with a solvent national retirement fund. Our organization was set up to expose the fund to capital markets to achieve financial returns. Optimal diversification and a long-term focus on growth has achieved a level of financial performance few institutional investors worldwide have matched. Recent third-party benchmarkers ranked CPP Investments #1 in performance among global peers. Diversification allows us to capture global growth and withstand periods of market uncertainty. It is a powerful way to enhance returns, but also to prevent concentration risk. When liabilities extend so far into the future, pension obligations beyond 75 years, growth and resilience from diversification are predicated on exposure to emerging markets. These markets are expected to account for more than half the world's annual GDP within the next 10 years. Exposing the fund to Chinese markets gives us access to one of the world's largest and fastest growing economies in sectors such as consumer discretionary, logistics, and real estate. In addition to growth from this demographic opportunity, China often moves in ways uncorrelated to developed markets, thus adding balance to our portfolio. Yes, we do absolutely understand there are very significant risks, particularly in the face of important social issues and evolving geopolitical risks. We aim to always conduct ourselves as principled and prudent investors with a view to acting in the best interests of contributors and beneficiaries. As we pursue global opportunities, we seek to avoid investments in companies involved in wrongdoings, especially violations of human rights. We do this in different ways. We incorporate human rights into our investment decision-making processes for all major transactions. Second, strong diligence, including processes assessing political, legal, and regulatory risks. Third, tools and systems to monitor and assess both passive and active holdings that do not meet our expectations on issues such as human rights. As a long-term investor, we actively engage and influence companies with human rights as a long-standing focus area. If that fails, we will exit or avoid making an investment in the first place. All these processes apply to our investments in China. We recognize that any investment in China needs to be handled with care, sophistication, and an acute understanding of the current political and geopolitical environment. Je remercie le comité de cette occasion.
I thank the committee for this opportunity, and I look forward to answering your questions.
Thank you, Mr. Leduc. We'll now go to Caisse de dépôt de placement de Québec. Mr. Delisle and Mr. Batani, are you both speaking to split the 5 minutes, or just you, Mr. Delisle? There you go, 5 minutes or less.
Monsieur le Président.
Mr. Chair, members of the committee, my name is Vincent Delisle. I'm Executive VP and Head of Liquid Markets at CDPQ. I'm accompanied by Philippe Batani, VP, Public Affairs and Communications at the Caisse de dépôt et placement du Québec. We're here to represent CDPQ, created in 1965 by an act of the Quebec National Assembly. We have net assets of $402 billion, and we manage the funds of 48 depositors, primarily public and parapublic pension and insurance funds in Quebec. Tonight, to further the objectives of the special committee, we'll provide an overview of CDPQ's international activities, including our activities in the People's Republic of China. We'll also talk about the measures we've adopted to conduct the most rigorous ESG assessments possible. So if we take a closer look at our total portfolio's international activities, the breakdown is as follows. Canada, 25%. United States, 40%. Europe, 16%. Asia Pacific, including Australia, 12%, and Latin America and other regions, 7%. At the end of February 2023, our exposure to the PRC represented 2% of our total portfolio. We invest more in liquid markets than private markets, which is a trend we expect to continue. Indeed, liquid markets, as the name suggests, give us more flexibility and agility to adjust our holdings based on the market environment and risks that may emerge over time. Taking a more granular look at our exposure to the PRC, we have around 60% of our portfolio in liquid markets and 40% in less liquid markets, particularly in real estate. Ultimately, we focus on Chinese companies that mainly serve their domestic market. We see China as a market that contributes to our diversification and our depositors' long-term performance. With a total GDP of close to 20%, its economy also generated a quarter of global growth over the last 10 years. As a global investment group, we take into consideration the same risks: financial, geopolitical, legal, as well as environmental, social, and governance-related risks, ESG-related risks. We believe sustainable investing is both necessary in terms of responsibility towards communities and an important factor for the long-term viability of the companies we invest in. Companies that enable us to generate returns for our depositors, who represent over 6 million Quebecers. We know that the environment investors must navigate is complex, and that includes because of significant geopolitical tensions, so we take a cautious and measured approach. Wherever we invest around the world, including in the PRC, and under all circumstances, we comply with all Canadian sanctions. In terms of risks related to ESG criteria, including social factors, we follow a rigorous approach based on a sustainable investing policy that defines the framework under which we integrate them into our asset management. The policy also sets out the primary tools available to our teams to achieve our objectives. When making investment decisions, our teams use a variety of tools that emphasize applying ESG criteria, background checks and review of partners involved in the companies, thorough analyses based on the targeted ownership stakes, and a review of the ESG processes of all of our external managers. To conclude, we hope that this overview has been helpful in understanding CDPQ's approach to international markets and the vigilance with which we apply the ESG risks. We are happy to answer any questions committee members might have this evening. Thank you. Good evening. I've been living in Canada for 5 years now, and I'm very proud to have recently obtained my permanent residency. One of my commitments is to learn to speak French, and I hope to be able to speak to you in French next time.
Senior Vice President and Chief Investment Officer at PSP Investments. In this capacity, I'm responsible for overseeing PSP total portfolio of over 230 billion and for establishing our long-term investment strategy. My responsibilities also include government relations, sustainable investments, the complementary portfolio, and PSP internal and external communications. I'm pleased to appear before the committee today to discuss the nature and extent of our investments in the People's Republic of China. PSP is a Crown corporation that operates at arm's length from the Government of Canada. It was established in 1999 to invest the amounts transferred by the Government of Canada for the funding of the post-2000 obligations of the following pension plans: the Federal Public Service of Canada, the Canadian Forces, the Royal Canadian Mounted Police, and since the 1st of March 2007, the Reserve Force Pension Plan. PSP's statutory mandate is to manage the funds in the best interest of the contributors and beneficiaries and to maximize investment returns without undue risk of loss, having regard to the funding policies and requirements of the plans and their ability to meet their financial obligations. The government communicates its risk tolerance for the pension plans to PSP annually, and our task is to design and implement the most suitable investment strategy. We take our job to support the long-term financial sustainability of the pension plans very seriously. Over our 22-year history, PSP has succeeded in its mandate and as such has supported the Canadian government in delivering on its pension promise. I'm proud to report that over the last 10 years, PSP has achieved a return of 9.8%, which compares favorably to our benchmark. The difference amounts to an additional return of almost 26 billion Canadian dollars. The strong investment performance is based on our ability to invest globally via public and private markets. This allows us to allocate funds to regions with the highest economic growth. North America, 57%, which includes 10% in Canada. Europe is 19%, Asia and Oceania 20%, of which 3% in China. And then there is Central and South America and Africa, which is another 4%. We manage these investments from our 4 investment centers around the world. Montreal, where most of our staff is located, New York with 57 employees, London 89, and Hong Kong 13. PSP sustainability activities are a key pillar of the CIO's group strategy and the total fund approach. We believe that ESG is not just about doing the right thing, but it is also a financial reality. We became a signatory of the UN-supported Principles for Responsible Investments in August 2014, and since then, we have built a strong sustainability foundation and a robust ESG policy framework. Our Sustainability and Climate Innovation Group works intensively with the asset classes to oversee and implement activities across the total fund. They provide guidance on ESG themes and trends, build internal capacity through ESG knowledge sharing, and collaborate with industry peers to drive systematic change on key ESG issues. We expect the same rigorous approach of the external managers and the general partners we work with. In closing, PSP objective as a long-term investor is to be an insightful global investor focused on maximizing risk-adjusted sustainable value and keeping abreast of societal norms and values through active management. This concludes my remarks today, and I look forward to your questions. Thank you.
Very much, and we'll get to those questions now, our first round, and we'll begin with the Honourable Mr. Fast for 6 minutes or less.
Well, thank you very much to all of our witnesses. Thank you for appearing at our study. If each one of you could tell me, are you aware of an executive order in council that was made in the United States by President Biden that prohibits prohibits American companies from investing in 59 Chinese companies? Are you all aware of that executive order? I don't know if you were told that today we'd be discussing investment in China writ broadly, which doesn't only include ESG, but also includes national security as an issue. And I think all 3 of you mentioned ESG as a significant concern and as one that you have factored into your investment decisions. You didn't say much about national security concerns as articulated perhaps a little more aggressively and assertively in the United States. Perhaps I could ask each one of you to very quickly comment on whether those concerns are factored into your investment decisions. Please, Mr. Leduc.
So thank you. Absolutely, we're aware of, I believe it's called a U.S. entities list.
That's right.
One of the changing dynamics around being a global investor is in the broad brush of geopolitics. It doesn't just surface in a particular country. So we think about investing in China and what decisions the government may make that could change the rules of the game in that country. Over the last 7 years, what we've seen is an erosion of predictability in global trade rules. And that has also resulted in various countries, including the United States, thinking through its own relationships with other global trade powers. And national security has really increased to the top of the agenda among public policymakers in Washington. And it's an area that we're following very closely. One of the reasons we're following that very closely is CPP Investments as deemed to be an independent pension plan in the U.S. What that means is we have a special status. So there's some very rigorous rules when a foreign investor enters a market like the U.S. That could be much more difficult and more costly to make investments. And the U.S. being the largest economy, it's very important for us to efficiently acquire assets. So, for example, we recently made an investment of a significant port system in the U.S. That would be very difficult to do without the status that we have. So that status means we have to engage with Washington and policymakers so they understand our approach to China.
Okay, thank you. Mr. Delaya?
Oui, Monsieur le Président,
Mr. Chair, with regards to our portfolio, diversification is the central point, and it's obvious that when the geopolitical situation is evolving, and we, of course, our intention is to be leaders in the criteria for investment in ESG investment. So when there are situations that are developing tensions, sanctions, we apply this when we build our portfolio. And as I mentioned in my opening statements, most of our investments in China are in liquid markets. And so when the situation changes and evolves, if there are sanctions, for example, that are applied, we adhere to this and we're able to adapt our portfolio. We're able to sell or to extract ourselves from opposition.
Thank you. When we think about our investment process, there might be an idea that portfolio managers are actually making decisions by themselves. That is actually not the case. Almost every single investment, especially in private markets, has to go through a committee, what we call the Risk and Investment Committee, which means that once a proposal is on the table, the risk team will look at it, our legal team will look at it, our responsible investment team will look at it. So we really dice and slice an investment proposal in many different ways, including geopolitical risk and national security risk. And this is actually becoming, as my neighbor said as well, more and more important in our process. So before an investment decision is made, it has been looked at from very many different angles, including national security and geopolitical risk.
You have about 40 seconds left, Mr. Fast. If you
Right,
want a quick
back to Mr. Leduc. I think Canadians will want to know what percentage of their investments are actually invested in China. 9.8. And do you also have to divest yourself at times when you realize that the ESG risk, the moral risk of that investment is much too high?
Investment are made of three things: buying, holding, and selling. And at any given day, we do all three. And if we're not satisfied with the level of risk or the information, we will absolutely invoke any one of those. And in that case, it would be selling.
Thank you very much, Mr. Fast. We'll now go to Mr. Fragascatos for 6 minutes or less.
Thank you, Mr. Chair. I'll begin actually with Mr. Leduc, and thank you, by the way, all of you for being here tonight. It is appreciated. Picking up on this point about 9.8% exposure, how has that evolved in, let's say, the past 10 years? Where were you a decade ago?
Yes, so I don't have the precise figures in terms of how that has gradually increased. I will put it into some context. So, for example, we're invested in U.S. about 35%, and we're invested in Canada above 14%. To put in more perspective, currently today, and as my peers mentioned, China is around 20% of GDP, and Canada is just above 2%. So it gives you a sense of we don't invest based on country-specific exposure. We think about things more on a factor basis. What that means is we would look at developed markets and we would look at emerging markets and what would be the types of exposure that we want so that the fund doesn't always move in the same direction. There's some areas of the fund that are not correlated. I'm more than happy to give you the specific data in terms of how our exposure to China has increased in the last decade.
And perhaps you could table that with the committee at another
Absolutely.
time.
We will
after
do
the
that
meeting.
very swiftly.
Or in the coming days. This question will go to each of you. I take your points that you've raised on human rights, and it sounds like each of the funds does place a focus on that value. But my question is, how is attention to human rights filtered down to within each organization? How is that woven into the culture of each fund so that when decisions are being made and when analysis is being taken, for example, Mr. Van Gelderen, you talked about the risk committee that exists. My question relates to precisely that. How is a culture of human rights put forward within each organization so that it is a key lens in decision making? We can begin with, we'll go with Mr. Leduc again, après Monsieur Delisle, and then Mr. Van Gelderen.
So we begin with a risk culture. So all of the professionals and practitioners that joins CPP Investments, it's important in terms of our own corporate culture, our guiding principles of high performance, integrity, and partnership. Human rights is increasingly an investment consideration. It is how we see the world. We strongly believe that any business, any asset, any company that does not take human rights seriously will just not be around. So it's a destruction in value to, especially given our very long investment holding. If we're going to hold a business for 10 years, we just don't think they're going to create value unless they take human rights. So our perspective is it's built into the professionalism of being a global investor.
Monsieur le Président,
Mr. Chair, the Caisse de dépôt et placement du Québec integrated early on the ESG culture, and this culture is throughout a very structured and rigorous approach with regards to ESG factors. This is through a sustainable investment policy that describes the convictions of the organization, the approach taken, factors taken into account, and the tools that will be used by our teams in order to implement these types of decisions. So throughout this policy, we also find the risks that are taken into account, financial risks, ESG risks, geopolitical, reputational risks, and this is applied throughout our portfolios, throughout our teams, and throughout the sectors in which we invest. So it is a very systematic approach that has an impact on all our investment in all countries, including China. A word on the process implemented in order to integrate concretely what this means for the Caisse. First of all, it's the application of systematic screening filters. We were talking about sanctions, sectoral exclusions. This also can have an impact on sectors.
5 seconds left,
Okay.
and I
Donc,
wanted to get
je
Mr.
rés-
Van Gelderen on the record.
Thank you. So I would answer your question in the following way. Our mandate that we get from the government is actually a very beautiful mandate because it provides a lot of flexibility in terms of where to invest and how to invest. So, for example, many people will claim that you have to build up a global portfolio according to GDP numbers, but there's nothing in our mandate to say that we have to have, let's say, 20% in China because it's 20% of global GDP. So when we start to build our policy portfolio, our strategic portfolio, we do take the world into account, but we start off with in-depth analysis of the different regions and countries. And again, we dice and slice this in many different ways to get a real feeling for what this country or region is about.
Excuse me, Mr. Van Gelderen, I'm afraid we've run out of Mr. Fragostato's time. We have to now move to Mr. Trudel for 6 minutes or less.
Merci, Monsieur le Président. Merci.
Thank you, Mr. Chair. Thank you to our witnesses. It's a pleasure to hear French being spoken here at the committee. There's more French this evening than in half of the cabinet of what we usually hear at the House of Commons, so it's really quite a pleasure for me. This afternoon, something interesting happened. A Chinese diplomat was declared persona non grata. So this afternoon, did you see any red flags go on? Say, oh, China might react and something is going to happen. There might be some types of sanctions. We can expect China to react. Is this something that crossed your mind? Will this have an impact for the investment funds that you manage? That China might react, and this geopolitical event that is happening will, in each of your organizations, will this have an impact? Did anything happen this afternoon? Mr. Batani or Mr. Dillon first? So when we build a portfolio, and I'm coming back on what was discussed this evening, diversification of the portfolio allows us to diversify risk regardless of the region or the sector. So we try to look at eventual things that might happen. One punctual event does not change the structure of a portfolio. Now, when we look at this point, events on the horizon that make it so that the risk ratio might change, we ask questions, but we oftentimes look at the geopolitical context is changing, how the macroeconomic situation is changing. We ask these questions a lot, and the portfolio is adapted. Mr. Leduc? Thank you.
My peers suggested, so I won't add on, but definitely diversification is critical. And it's true that in the last couple of years, these events impacting bilateral and multilateral relations, when there's an event, sometimes there is a secondary event and tertiary events. And what we're finding is that there's no place to hide because of the increasing level of diplomatic friction among some of the large markets that we invest in. It's something that we have to be very well aware of and go in with eyes wide open. And as my peer suggested, diversification is the most powerful antidote to these events happening, and they're happening with an increasing amount of frequency.
En complémentaire, est-ce que vous pensez...
Do you think that there's a risk that China might confiscate assets that you have as a reprisal?
For me to speculate on what China might do, but it is the type of events that we've seen around the world in reaction. So we won't speculate on that, but it's something that we always have to brace ourselves for.
Monsieur Gelderen?
A similar answer as my two colleagues. The event this afternoon for sure was noticed. It was discussed immediately with my team in Montreal in terms of how Will this impact the pricing of geopolitical risk? That's a very difficult topic, to be honest, because it's not isolated. When something happens in one country, it immediately has an impact on another country too. And diversification is one of the tools, methods to mitigate that risk. But for sure, we will have another discussion on what does this mean? Is enough of the risk priced into the different markets?
Bon, je pense qu'on a vu après-midi.
What we saw this afternoon is only the tip of the iceberg of a situation that's been going on for a few weeks or months. So if we look at the level of risk, was it deemed to be higher? And if yes, was a new analysis conducted? Are you starting to consider that China is becoming a problem zone for investment? Mr. Leduc, to start.
Cautious also to not be episodic and not overreact to events. Again, I'll lean on our exceptionally long investment horizon and thinking about the importance of being exposed to emerging markets, knowing full well that there will be risks from time to time. Look, I would say that the overall geopolitical situation over the last 5 years has intensified. Those risks have increased. And we, in terms of portfolio construction, in terms of the sorts of factors that we're comfortable with, it's a continuous process. It's based on a natural rhythm of thinking through what is our appetite among different sorts of risk. And so there's a variety of different trigger points that ensures that process happens. So for example, when we think of our overall risk appetite, most recently, the Chief Actuary of Canada does a very extensive, thorough review of the sustainability of the Canada Pension Plan. And there's a lot of forecasts and adjustments. So that gives us an opportunity to assess where the fund is going in terms of the projections over the 75 years and to test whether our continuing risk appetite continues to be prudent. The same applies to other sorts of risks. So our approach is, to develop a portfolio that will help sustain the fund, knowing full well and taking into account factors that drive that sustainability, and being very well aware of the increasing risks, geopolitical risks, and other forms of risks, and taking into account the continuous process-driven, systematic-driven process for portfolio construction, and not be driven by episodes.
Thank you, Mr. Leduc. Thank you, Mr. Trudel. Ms. McPherson now for 6 minutes or less.
Thank you very much, Mr. Chair. Thank you all very much for being here this evening. I know it's painful for all of us sometimes to be here late at night on a Monday, but it's a time you probably could have been spending with your families. So thank you very much for taking that time to share your expertise with us. I'm not an expert on any of this, and so I appreciate you bringing your expertise here. But one of the questions I have, and I'll ask each of you, it's very complicated how ownership is determined within many different investment structures. So, for example, we know in sub-Saharan Africa that much of the infrastructure is being funded by the Chinese government. We know that China has many assets throughout the world. How do you determine that you are not in fact investing in Chinese companies, or how do you measure that risk, knowing that it is not just what's happening in China, it's what's happening around the world as China continues to spread through their Belt and Road Initiative? Just something I would be interested in, and perhaps Mr. Battani or Mr. Delis, I could start with you.
Notre exposition en Chine.
Our exposure in China seeks to offer sectoral diversification to be complementary to what we don't find in some other geographies. I mentioned in the preamble that we have decided to prioritize investments in China through liquid markets to allow us to change our minds, to sell if the situation evolves. So the investment process, whether it be for China or elsewhere, is the same. It is rigorous. There are ESG filters that are used. We consider our domestic exposure in China, but also multinationals who deal in China, large American companies or European companies. For us, the geography is important, but our process is even more important. We're talking about China today, but any business that is included in our portfolio goes through the same criteria, the ESG filters, where we evaluate the risk.
I met with you and Mr. Downing, I think about a year ago, to speak about the Canadian pension plan. So thank you for being here. Obviously, I'd love to be able to ask you some questions about the Alberta pension plan, but I don't think that's the topic we're working with today. So if you could comment on how the CPP manages those risks.
It's a very, very good point. When we think about the opportunities and risks associated in investing in China, it's not limited to those geographic borders. We believe strongly that in order to get the growth and the resilience for the fund over our investment horizon, we need exposure to emerging markets. And you can't be exposed to emerging markets without understanding China. It is a disproportionate amount of that emerging markets. And so that means being well aware of its place in the world as a large exporter, and our approach to engaging and investing in China begins by truly doing our homework, due diligence, and it comes down to the how. So the low-cost approach of passive investments doesn't allow us to really understand those risks. So we believe being an active investor and understanding the sectors that we're comfortable with and understanding the sectors that we're simply not comfortable with. And so the how really matters in that context.
Thank you. Mr. Geldern?
Yeah, one thing to add to what my neighbor just said, this is not something that certainly popped up. China has and Asia has been a very powerful force already for decades. And when you look at the global economy, the interdependencies are huge. So your point is spot on. It's not a block that you can actually kind of ignore because the interdependencies are so huge, even within the US or Europe and China. I totally agree with my neighbor that as a long-term investor, you should be an active manager. And you should spend the time and the efforts to really understand value chains and business models to get a better grip, a better understanding of how things work and where countries do have an impact or not.
And I guess just to follow up on that a little bit, I mean, yes, we haven't seen the growth of China in investments in different places around the world for a very long time, but I think that there is a new belligerence that we're seeing from China, you know, could be echoed very much by investments that may be made in Russian investments, that we've now seen that reality has changed very, very quickly on how we manage that. So knowing those changing levels of belligerence or the changing levels of how the Chinese government is acting, do you feel that, do you trust that the majority of pensions, you don't even have to speak about your own and your own, but do you feel that Canadians are protected, that we have enough legislation in place, that we are doing enough to protect for the risks that are increasing perhaps?
Well,
I think we're going to, excuse me, Mr. Van Gelderen, we've come to the end of Mrs. Person's time. Yes, she will have another turn to ask you some questions. We now go, in fact, to our second round, and we'll begin with Mr. Seaback for 5 minutes or less.
Great, thanks very much. I'm going to try and ask direct questions very quickly to see if you can answer them quickly because I only have 5 minutes. So you mentioned you're aware of the executive order in the United States that listed 59 entities that the United States has banned. Do any of your investment funds have direct or passive investments in those 59 entities? And I'll start with you, Mr. Van Gelderen, and then we'll just work our way down.
Given the exposure we have to index tracking and passive management, I do expect that some of these names are in our portfolio.
Thank you. Mr. Leduc?
To the best of my knowledge, we have no direct exposure to any of the companies that are on that list.
What about passive?
That I will have to confirm.
Mr. Delisle?
On reviendra avec les détails spécifiques.
We can come back with specific detail, but we respect sanctions, and we have these lists in our systematic filters, and we apply them and change our portfolio. I can bring you details.
Oh, sorry, you're the same.
Yeah.
Sorry, I apologize. Okay, second thing, are all of you aware of the Uyghur Forced Labor Prevention Act and the entities list that was created as a result of the Uyghur Forced Labor Prevention Act? Same question. Do you have any direct investments or passive investments with companies that are listed under the UFLPA entity list? I'll start again with you, Mr.
On this particular point, I have to double check with my team. I don't know. I can't answer that question.
Mr. Leduc.
I'm going to have to familiarize myself with that particular legislation, but we are exceedingly cautious in that particular region.
Yes, Mr. Delisle or Mr. Vitani.
Nous appliquons la liste UF.
We apply the UFLPA entity list on a voluntary basis throughout our portfolio.
Okay, great. So the next question then I'm going to go to is, again, I want to go with this direct versus passive investment. Hong Kong Watch put out a report where they talked about various index funds. For example, MSCI Emerging Markets Index, MSCI China Index, MSCI All Country World Index. And in all of those index funds, they said that there was either forced labor in those companies' supply chains or others. Do any of your investments include any of those funds that I just listed? And go down again.
In our passive investment approach, we do have exposure to the MSCI Asia index funds. So yes, there will be some names.
Mr. Leduc?
In the spirit of directness, the short answer is no, but I'm more than happy to explain a little bit how we use indices. It's all through synthetics. There's no fund that actually gets into those companies.
Utilisons les listes comme celle, l'indice MSCI Chine.
We have some passive investment in China, as mentioned previously. When situations evolve or we see that there are undesirable investments in these liquid markets, we withdraw them from our portfolio quickly.
1 minute. So then, given what that there may be passive investments in these things, I think there are, and again, exposure to some of these indexes, would your recommendation be that Canada needs some legislation to ensure that these types of investments are not taking place? Anyone who wants to take a stab at that?
Say that could be a blunt instrument. I think that really is dependent on the due diligence of these organizations because it could have unintended consequences in terms of having restrictions on our ability to invest broadly.
On va toujours respecter les lois.
We've always respected Canadian laws and sanctions. It's not up to us to determine the laws. It's up to the government. For whatever reasons they agree on, but when there are regulations and when they're communicated, we do everything to apply them.
Thank you, Mr. Seeback. We'll now go to Mr. Oliphant for 5 minutes or less.
Mr. Chair, and thank you all for being here, and thanks some of you for taking care of my money. And it's interesting because I say that because you are guardians of a public trust in different ways, and that is the money that we as members, either in Quebec or Canada or from a public sector union or employee might put in, and we need to trust you, but we also need to question you. And this is the kind of conversation I would like to have over a glass of wine to try to talk to you about our concerns as legislators and your due diligence that you need to do. Even the fact they probably briefed you on who each of us was. I'm a United Church minister, and we have come at issues of investment from a moral standpoint for a long time. I don't always share that. I actually think that we come at this from an investment standpoint, and the risk that I want you to manage for Canadians is the risk of a bad investment because of a geopolitical crisis, environmental degradation, human rights abuses, because necessarily you are investing for a long period. I'm going to live a long time, and I want my CPP to keep coming, and I want money from the cash to keep coming into my partner. I want that to happen. So it's from a financial standpoint, not a moral standpoint, I come to that. I don't actually believe you're in the morals business. I think you should be investing our money clearly. And the safety issue, and I want to know a little bit about how you actually assess that risk. What are your sources? Where do you go to get information? How do you know where you've got, over $1 trillion among the three of you? How do you do that work? And as opposed to having a legislative response, what is your practical response in keeping my long-term investments safe and free from human rights abuses? Mr. Leduc, most of my money's with you, so you start.
Well, as a contributor, may you live a very long life.
Thank you.
So look, we're a knowledge-based organization. It begins first and foremost with the people. And this is why, the emphasis around the creation of CPP Investments, first and foremost, was to create a professional investment organization. And so, of course, the evolution of the investment landscape, the issues have become much more complicated in really truly understanding the broader environmental and social and governments. We talk frequently about us having an exceptionally long investment horizon, but that also comes with risks. The longer you hold on to a particular asset, the more likely that something will happen. So if you own, say, a toll road in a particular country, the likelihood of something happening over a decade, maybe government intervention in terms of the rates is higher. So we have to have be very alive to the wide variety of risks that come forward.
Do you read Human Rights Watch reports and Amnesty International reports and Transparency Inc. reports?
Absolutely.
Yeah.
No.
Can you give us some confidence?
We are a data-driven organization, and that's both quantitative and qualitative information. And so, as I said, we are a knowledge-based organization, so it really is based on as much information and the best possible information. It also important why we have offices in our key markets. It's not enough to read a report that you can pull out or acquire. It's being on the ground, developing relationships with business partners who understand the local business culture, building relationships with governments and everywhere that we operate, not developing a relationship when bad things happen, having the relationship before bad things happen or good things happen when they want to sell their assets to us. So I think it's relationships, it's data, it's information, and being agnostic as to the source of information and being open.
And what role, and maybe for the Caisse as well, what role do Quebec or Canadian values play in this? In addition to risk management, does it play a part of your corporate culture as investors?
We'll need a brief answer if you don't mind. Thank you.
Philippe.
Comme investisseur.
As investors, for 6 million Quebecers, we cannot extract the Caisse from the Quebec society. So through our investments, of course, what we're trying to do is to invest capital in a constructive way that reflects our society. So we do this in a structured and rigorous way, as my colleague was saying, through the acquisition of the best talent and the acquisition of the best information. This is key to identify the issues. We do this by acquiring the best information that we can. Through lists of international data, we look at the list of sanctions that have been identified, and also we work with the best providers.
Oliphant's time now. Yes, you'll have another opportunity, that's for sure. In fact, another opportunity now goes to Mr. Trudel for 2.5 minutes or less.
Okay. Merci. Je veux savoir,
Thank you. So for a couple of weeks, there's been a lot of pressure on the Trudeau government to expel a Chinese diplomat, and it happened today. I heard on an interview this morning they were saying that the government had to weigh economic interests, had to weigh all of this before acting. Today they made a decision. Did they consult with you? Does the government consult with you before taking these types of decisions? Because these are funds that concern Canadians. Do they ask for advice? Mr. Gulderin? First.
Thank you for bringing this forward. Like I said, it is very complex. It's not an isolated event. And if you think about the consequences that we will face, it's not just China. It's actually impacting our whole global portfolio. But to answer your question, have they consulted us? Is the government consulting us in terms of their decisions? No, they don't.
Okay. Monsieur Leduc?
No, they have not consulted. We consult and governments consult with us around the world on a broad range of matters, infrastructure policy, different investment-related issues. But when it comes to diplomacy, that's not an area of our expertise.
Donc, depuis une semaine, il n'y a personne.
So in the past week, nobody from the government asked you what the impact would be if they expel a Chinese diplomat. You were not consulted on this?
Pas non plus. Est-ce que
No? Has it happened in the past for other countries, other sanctions, other geopolitical situations? Does the government consult with you before acting politically towards other countries? I would say no. Never happened? Well, maybe when I wasn't there. I would be surprised. When we build our portfolio, when we assess, we have long-term objectives. We try to see how the risks might change. So when there are situations such as this, we hope that we would have already conducted analyses to adapt our portfolio according to the level of risk. And the way that we expose ourselves for China is through liquid investment. So when there are situations and we have to act quickly, we can. We've had to put an end to some of our investments as well to reflect this risk.
We'll now go to Ms. McPherson for 2.5 minutes.
2.5 minutes. Okay. Thank you, Mr. Chair. Thank you again. I was going to go and ask about legislation, and I might get back to that, but I actually have another question I'd like to ask you, Mr. Leduc. So the mandate of the CPP is to invest its assets with a view to achieving a maximum rate of return without undue risk of loss. But that mandate does not always gel with protecting human rights, protecting environment, ensuring that indigenous peoples are protected. So we've seen this time and time again with Canadian companies where they go abroad, they don't act with the same care that we expect them to act with, certainly the same care we would expect them to act with in Canada. How does that work? How do you balance that? And while I trust very much that you do a great job balancing it, how do we ensure that can be balanced, within the sector?
What I would say is that legislation that we operate under was crafted with a lot of foresight. Risk is not, it changes over time in terms of, commercial activity. What are broad stakeholder expectations? So I would suggest that those broad risks that you mentioned are absolutely part of risk-adjusted returns. So they're two sides of the same coin. We were established. The reason CPPIB was established is because the fund was going to be insolvent, and it was not taking enough risk. So we were established to take risks, now calculated risks, sophisticated levels of risk. And as time marches on, understanding what drives the value in corporations is determined by how they manage their relationships with their employees. How do they manage their relationships with their communities? How do they manage their relationships with First Nations? So
But
it's
sorry to
part of
interrupt, but
risk.
it
No.
does feel like, I mean, we have a core ombudsperson in this country that has no ability to compel testimony or witness,
Yeah.
has in fact found 0 companies guilty of perpetrating any human rights abuses, even though we know very clearly this is happening. So how do we trust that? Like,
Yeah.
where are you getting your information from? Because you can't compel testimony and witness from businesses either. So are you just accepting that they say they're doing the right thing, and that's how we're going with this?
Well,
No,
at this point, we'll have to wait until Ms. McPherson's
2.5
time
minutes is
comes
very
around.
short.
Again, 2.5 minutes goes by very, very quickly. We'll now go to 5 minutes with Mr. Hoback.
For being here. Actually, I'll continue on that line. In regards to ESG, you're requiring ESG when you look at your different investments. How are you making sure the investments that you're putting money into are doing the same thing? How are you getting that picture at that next level where you've got passive investments or even active investments that they've got a proper ESG strategy? And we'll have to be quick because I have lots of questions. I'll start off with you, Mr. Leduc.
Sure. So in the context of a direct investment, strong due diligence, I mean, looking at management in the eyes and having a data room and truly understanding their track record.
So just quickly right there.
Yep.
So if it's a Chinese investment versus an American investment or Canadian investment, do you use the exact same formula, the same criteria for the ESG requirements as you would for China?
No, and it would be sectoral first and foremost. You know, investing in a particular sector would be very different, you know, within a country. And so in the context of China, for example, the A-share market, hundreds of companies. So we would pour through and do our deep dive into all of those companies to understand what is the purpose of their business, what are they exposed to, and then if we don't have the necessary information at our disposal, we will engage. If we don't have the answers that makes us comfortable, we will not invest. And we have a process in place to ensure we do not get exposed to companies we're not comfortable with.
Mr. Gildren?
Yeah, our approach is exactly the same. We use the same criteria, but it's definitely different working in the U.S. with the same criteria than in other parts or emerging markets.
How do I look at from the other side, the other shoe? I'm looking for that investment from you. How do I say it's fair for me? I have to hit a higher criteria of ESG than, let's say, a company out of China. Is that fair to say?
Well, I would approach it differently and say, like, well, you know, we expect the U.S. companies or Western companies to apply with a lot of criteria we bring forward. And most of the time they do, which requires less of a risk premium that we look for than when we go to other parts of the world.
So you adjusted in the risk premium part of the equation?
Sure.
Okay.
Yeah.
All right.
And if, like my neighbor said, there's more uncertainty, again, what I mentioned before, no one is telling me that I have to go into those regions. So if the premium I ask is too high and it's not given to me, I'm not investing.
So the Chinese Belt and Road Initiative, we're very aware of what that is. Have you ran into Chinese investment directly where they've invested or scooped deals on you as they go down that path? And do you know if you've invested in companies that are part of the Belt and Road Initiative? I'll start off with you, Mr. Leduc. It's easy, you're in the middle, and then I'll go to Mr. Vincent.
To the best of my knowledge, we don't have a lot of exposure. You know, understanding the countries that are impacted are not really part of our core markets. In the beginning of your question, we do from time to time, as we invest around the world, run into Chinese investors. There's a large sovereign wealth fund that we would compete against, so that does happen.
Our exposure is 4.4 billion, especially in real estate, logistics, and multi-residential, and a few private investments, so not in the Belt and Road.
Edward?
Yeah, and I can confirm it's the same for us.
Okay, so you're not necessarily active in that activity. Okay. Then I'm going to go right back to trying to understand the ratios that you use in the countries like China at this point in time, and what does it take to change those ratios around? What is it is that ratio today the same ratio that you would have had in your portfolio, let's say 2019 or 2016? How would it compare?
Our investment thesis, as we think about emerging markets and as we think about China's place in that investment, in that broad market, is something that we continue to evaluate on a year to year. We tend to think through multi-years. We tend to not tweak our portfolio on a 12-month basis. We do think in larger time periods. We have a strategic portfolio that's really more in terms of a 5-year time frame. And we're absolutely seized with, changes in geopolitical patterns and taking that into. So it's under review for certain.
Okay. You talked about before that legislation would be a blunt instrument in regards to creating some sort of enforcement like they do in the U.S. So what would be a good instrument that wouldn't be so blunt that would achieve the results that we want?
And again, a brief answer, please, sir.
Strong, transparent disclosure by all companies in a standardized way.
Disclosure.
Thank you very much,
Thank you.
Mr. Hoback. We'll now go to Ms. Yip for 5 minutes or less.
Thank you very much for coming in this evening session. My question is to Monsieur Leduc. In your opening statement, you mentioned, well, first of all, it is impressive that CPP Investment has nearly 2,000 companies in your portfolio among a potential universe of 10,000. How does your organization manage to incorporate and monitor the number of companies for ESG criteria effectively? Seems like a lot.
It is a lot, and we're risk-focused. So it wouldn't be a process that we would comb through, say, 2,000 particular constituents. Where it's a particular sector that may be involved in an area that would have a higher controversy score or is known to have issues around governance. Then we're also able to acquire a wide variety of reports that are available to investors around the world. They're a little bit like report cards. If there are any red flags, it's a lot more efficient to then do a deep dive and understand how do they treat human rights. So it's something that we're risk-focused in understanding and where we could best place efficiently our attention.
Okay. Also in your opening statement, you mentioned the exclusions and exit section of your policy on sustainable investing. Could you elaborate on that? And are there timelines to provide a quick exit should an investment be contentious or very unfavorable?
Yes, so as an example for the first part of your question, if there are things that are, against policy, I'll use an example: mines and munitions. There, we would obviously not invest in that area. That would be one of the. In terms of exits, it's not a satisfactory answer to say it depends. If it's a real asset, I'll use an example: a toll road, for example. That's not easily disposed of. If it's a publicly traded security, we could do it very quickly. So it all depends on what the nature of the asset might be.
Did CPP Investments invest in any cryptocurrency?
No.
Okay. Well, that's a good answer. Now, does CPP Investment continue to have any investments with Tencent?
Yes, we do.
Why is that?
It's an investment that we made almost a decade ago. We recognize that the organization has evolved and changed, and the issues associated with their operations. One example might be dual-use technologies. So they were built for a particular intention, and then over time they may be used for intentions that were not contemplated at the time. So it is something that we are seized with and monitoring very, very closely.
So even though you're aware they may be engaged, certain parts of the business may be engaged in surveillance, how do you come to the decision that this is not acceptable and move on?
Well, we haven't made any conclusion. So it is an exposure that we have that we're monitoring very, very closely and can continue to understand the risks, including some broader human rights related dimensions of that investment.
Okay. Aside from Tencent, what about 7 equities linked to forced labor and 6 equities linked to the construction of other infrastructure, less than desirable infrastructure.
Sorry, are those specific companies or entities? Sorry.
Just equities.
Yeah, so generally, we've improved our processes. It used to be that we had a very rigorous, and we continue to have a very rigorous process associated with direct investments where we would have a large exposure. When it comes to, say, an index that may be, hundreds of companies with tiny exposures, even there we've established the processes, the rigorous process that we have for direct onto those broader index base. So we did, as I mentioned earlier, we did a very deep dive combing through all of the exposures, trying to understand what their business is, try to understand where they may be exposed through supply chains that would be unacceptable to us. And we're confident in that process. We're confident in the number of holdings that we're careful not to invest in. But the capital markets are dynamic. Bad guys are often ahead of the good guys, so it's always a changing set of circumstances. But we continue to be very focused on monitoring the risks.
Thank you. I will now we're going to go through into the third round. The order that I'll have is Mr. Viersen, then Mr. Cormier, and then to wrap up, Mr. Trudell and Ms. McPherson. So everybody sticks to time. We'll get that done. Mr. Viersen, it's over to you for 5 minutes or less.
Well, thank you, Mr. Chair, and thank you to our guests for being here. To the Canadian Pension Plan Investment Board, Canadian Pension Fund is invested in the Postal Savings Bank of China. Does that investment continue?
I will have to get back to you. I'm sorry, I don't have that information with me right now.
Interesting. China and Africa's population are similar in population. Why such a focus on, in terms of percentage of your portfolio? Why such a focus on China when it seems to be excluding, Africa just gets lumped in with a number of other continents? And China, one country. What's the difference?
Well, one difference is China is one market. It's a complex market, but it's one market. Africa is, dozens of very different markets with very different risks associated. And once you're in a market, we're in for the long run. So as I mentioned earlier, developing relationships, understanding the business culture, our ability to do that in one market is much more efficient than to try to open up, say, 17 offices.
How much of our investment in China ends up in Africa, anyways?
That would be hard to reverse engineer. As I said, we're very focused in the how in China, so it's not across all sectors. I mentioned, for example, the largest would be consumer discretionary, which is really aimed at the consumer market in China. It's a demographic play, understanding the sheer size of the market. Yeah. Real estate, so multifamily housing, and logistics as their largest exporter to the world, investing in things that help carry products and services around the world. So those are the three buckets that
you can see how logistics would we invest in Chinese logistics companies for them to then do more business in Africa.
Certainly those products and services would make their way to Africa, absolutely.
Yeah. So just I guess Mr. Van Gelderen, would your investments be ending up in Africa coming through China? I guess what I'm getting at is that China is doing a lot of work in Africa. Canadian investments in Chinese banking, for example, only facilitates Chinese influence in Africa. We could probably cut out the middleman and go directly to Africa ourselves. Could you comment on that a little?
It's a similar comment as my neighbor said. Africa consists of 55 different countries. They are very different in nature, very different in economic growth. So if you really look at Africa as an investable continent, probably you end up only with a few countries that are interesting for us as very large investors. But then you come into the next almost challenge. Is like, are the investments you're really interested in Africa, are they really available to us? And again, there are many hurdles to overcome. What we do, and again, on a very limited scale, is agriculture.
Yeah. What percentage of your Chinese investment in China? What percentage do you think ends up facilitating Chinese influence in Africa?
I cannot answer that.
Are you invested in any banking, similarly to the postal bank?
Well, as a large chunk of our investments is China is passive. For sure, there will be investment in financial institutions as well, and they will for sure invest in Africa.
Okay.
But I do not have a number for that.
All right. The folks from Quebec, you have any comments around your investments in China and how it might influence or how it might allow for Chinese influence in Africa?
Our decision to invest in China is based on complementarity. So our exposure in China offers us exposure to sectors that are growing. It's close to 20% of the world GDP. And so what is attracting us in the Chinese market is the emergence of consumerism, the middle class, and the link between China and Africa is not there for us.
Much, gentlemen. We'll now go to Monsieur Cormier for 5 minutes or less.
Merci beaucoup, Monsieur le Président.
Thank you. And thank you to the witnesses for being here today. I'm not an investment expert, but I know that at the end of the year, when I look, it's always nice to see that I have made a small profit in my small investments. Mr. Leduc, you've said that you check to make sure that your investors are respecting human rights issues. We had a witness a few weeks ago, and Mr. Colbro, executive director of 2 electronic companies, was saying the business sector in China is quite transparent. Legal documents, structure of businesses, it's quite transparent. Do you agree with this statement that information that you can find on Chinese businesses are easily accessible?
It varies significantly. I would hesitate to say information is easily accessible, depending on what you're investing in. If you're a direct investor, active investor, and you're looking at a real asset, it's similar to a situation in Canada or United States in private markets. Those companies and the management teams are not as constrained by very rigid securities-related rules. So we're able to enter the business and spend a lot of time with the management team and, if necessary, the board of directors, and get information that would not otherwise be publicly available. And that really allows us to calculate what are the risk-adjusted returns. In China, it could be very similar. If we're buying a real asset, such as a logistics center by a port, our ability to enter the business and understand it through our partners, through our local experts, gains a significant advantage for information efficiency. Publicly traded, thousands of potential holdings through the China A-share market. There, again, we depend heavily on the local securities rules of the Chinese markets. The China Securities Regulatory Commission has quite significant and sophisticated rules around disclosure.
Merci, Monsieur Leduc.
Thank you. If we were to ask the average citizen the question and to ask them if they give greater importance to their year-end profits or where their money is invested. If it's invested in businesses that don't respect human rights, perhaps it's a hypothetical question, but maybe it needs to be answered. What do you think of this question? Do you think the investor, the consumer, is aware of these changes throughout the world, of investing their money in businesses that are respecting human rights or other international laws? Do you see any change of behavior on behalf of investors? Yes, we talk about this a lot. I think that there's an appetite for investors who want to know that their money was invested correctly. But, you know, profit and criteria, ESG criteria, go hand in hand. One does not exclude the other. And our sustainable investment policy that we've had at the Caisse since 2017 is based on the principle that companies that are following environmental, social, and good governance structures are businesses that will profit. So if the average citizen asks, what we would say is that it goes hand in hand. Businesses that have good practices should have a superior profit. As for the groups, you said that you represent 47 depositors, but as for a type of investor in Quebec, are you representing farmers' pension funds, for example? 48 depositors. Insurance, public insurance funds, parapublic. I don't have the 48 here, but we have the REGA, the RRQ, and all the depositors are supporting us and have been encouraged us to adopt these measures of good investment practices, of sustainable funding, and they encourage us with all these ESG practices.
Mr. Cormier, we'll now go to Mr. Trudel for 2.5 minutes or less.
Merci.
Thank you. How long? 2 minutes? Okay. So little time. So thank you. Mr. Gildurin, you said that with regards to the expelling the Chinese diplomat, that the government officials did speak to you? How did this work? I don't imagine it's the first time. How does this happen, these type of consultations?
You misunderstood me. There was no consultation whatsoever.
Okay. Mais de façon générale,
So, but generally speaking, do you think, well, it's a lot of money. If we're talking about $1 billion, could this be relevant? Do you think that governments, before starting sanctions against countries, should explain the situation to you, should explain the consequences? And that way you would know what's going to happen ahead of time. Would this be relevant for you? It's not our role. It's not our role to determine this type of regulation. The government has a predisposition to do it. We listen, we see what is decided. It's not our role. So today's decision could have an impact on your investments. We're talking about 400 billion for your total funds. This could have an impact. Do you think it would be relevant if you were made aware of this before acting? Could this change anything for you? I don't think so. As I was saying, I don't think it's up to us to intervene in this type of decision-making process. Do you have anything to add?
You have the easy job, investing the money, making big decisions around
Vous trouvez ça
diplomatic
facile, vous?
relations. Well, relatively.
You find that easy?
Relative.
Okay.
Making these big decisions is something for elected officials to do, and we try to monitor as best as we can and keep up with the changes and make the decisions that are in the best interest of contributors and beneficiaries in the context of these diplomatic decisions.
Thank you, Mr. Trudel.
Merci, monsieur.
We'll now go to Ms. McPherson for our final 2.5 minutes.
Thank you, Mr. Chair. Thank you all very much for being here. And Mr. Leduc, I am going to focus on you again because I have some interesting questions for you. But first of all, before I get back to asking you a little bit about how you evaluate the risk versus the human rights, according to the budget in 2022, the federal government said that they would, and I quote, move forward with requirements for disclosure of ESG considerations, including climate-related risks for federally regulated pension plans. Have you received any guidance? Has there been any guidance from the Minister of Finance with regards to that?
There are various ways that we engage with the Canadian government and other stakeholders in Canada on those issues. There's a council that was created, the Sustainable Finance, which are very focused on disclosure.
When was that created?
It was created, I think, about 2 years ago, and we're involved.
So since 2022, there's been no difference in the way that you receive the information?
Well, I think that the product of that work has been to develop the taxonomy in trying to better understand how you could create disclosure rules and standards that are very usable for investors like us. And so that has been the main focus of that work, and we are very encouraged by the work. We, CPP Investments was part, and this goes back about 5 years ago, a task force, a global task force that started the focus on creating a standardized process globally for investors around climate change risks, for example.
Okay. Yeah, because I mean, one of the things that you mentioned to my colleague, Ms. Yip, is that you are seized with and moderating very carefully. To be fair, I have to say that sounds an awful lot like a lot of the questions I get from Question Period.
Yeah.
It doesn't give me the confidence that
Yeah.
it is actually, there's no transparency there for somebody like myself who's not
That's a very good
investment
point.
specialist.
I would say we're very engaged and we're very involved. We're a participant in capital markets. Rules around climate change and human rights affect the value creation of the constituent parts, the businesses that are part of capital markets. We're not a passive investor. We're an active, productive, engaged investor, and so having that long investment horizon and not being focused on making our 90-day numbers or even our annual numbers, but truly understanding the nature of the businesses and their as an engine of value creation, and how they treat their employees, how they treat their communities is very important. We would say the world is in a much better place with investors like us in it that have the muscle to force change. If it was just passive investors, the billions of people who own little units and don't act together, to have institutional investors with that power and influence is so important, and having us as active investors is also very important.
That's an excellent
Thank
point
you very
to end
much,
on.
Ms.
Thank you.
McPherson. That brings us to the end of our time with the R greater than G club, on the sounds of things, at least to conjure up Thomas Piketty. We thank you, gentlemen, for your time this evening. It's been very illuminating. But for now, we will take a quick break as we will set up our next panel. panel this evening. Quick heads up to everybody that we will be going into committee business in about an hour and a half. So we will try and use our time as efficiently as possible.
Point of order, really?
Well, no, pardon me.
An hour and 5 minutes.
Well, no. Yeah, right. An hour and 15
I think you will
minutes.
find you have unanimous consent to adjourn at 9:30.
Yeah, right. I tried to whiff that one by you, but
I think you-
all right, there we go.
We don't want to go to
Okay.
10, do we?
But we digress. For benefit of our witnesses joining us online now, want to welcome you here. First of all, we have Paula Glick, co-founder of Honeytree Investment Management Limited, Dr. Ari Van Asche, a full professor at HEC Montreal. From the British Columbia Investment Management Corporation, Jennifer Colson, Senior Managing Director and Global Head, Environmental, Social and Governance. Daniel Garand, Executive Vice President and Global Head, Public Markets. And from the Ontario Teachers Pension Plan, Stephen McLennan, Executive Managing Director, Total Fund Management. Now, all of you have done your sound checks. Mr. Garand, we'd ask you to speak up a little bit when it's your turn to either speak or answer a question. And we'll try and keep everybody pretty close to the times allocated for questions and answers so that we can get as many questions and answers accomplished as possible. You've all had your Zoom set up so you have the interpretation available to you if you need that. So without any further preliminaries, we would like now to go to Paula Glick. You have an opening statement of 5 minutes or less. Ms. Glick, please continue. Ms. Glick, you're on mute, ma'am. There we go.
Thank you very much. Thank you. I thought I would just introduce myself. I'm speaking more as an individual than as a member of my firm, although I think it's beneficial to understand where I'm coming from the perspective, obviously, of my investment career and Honeytree today. So I just will share that I've spent the first years of my investment career working in positions that provided me a broad understanding of the investment industry, working on the brokerage and or capital market side of the business as a licensed advisor, a trader, institutional trader, as well as a retail trader. I worked in the asset management world and portfolio management and operations. But in the early 2000s, this was in the late 90s, in the early 2000s, I started to look for something that would provide me with more purpose. And that's when I started to learn about ESG. And at that time, I had applied for a job with what is now one of the leading ESG research providers, Sustainalytics, which has recently been purchased by Morningstar. And I spent 9 years there working with pension plans, foundations, endowments, asset managers, helping them to understand the benefits of ESG, as well as how to integrate it or consider it in their processes. And then I moved to MSCI, which I think you might be familiar with. And I spent 5 years with them, where they were very involved in building up the ESG part of their business, but in conjunction with their passive index development, as well as their risk management platforms. And they were looking to expand their index capabilities relating to various investors who wanted to align ESG, but within that passive index context. So I spent 5 years there. So after the 14 years of combined time at these two leading ESG research and analytics firms, I basically developed a real understanding of how asset owners and asset managers consider ESG and integrate ESG. And then when I started my own asset management firm, Honeytree Investment Management, I was very aware of some of the shortcomings in the ESG space and wanted to sort of create something that would be a little bit different. I also went from the passive world right back into active, which is sort of the wrong direction of most of the world. But you know, my our approach is a little bit, I think, different from how I was seeing things being done in the past. And just to step back, I would say there are three main reasons why investors are interested in ESG, and they're often overlapping. And so for me, one is you want to align your values, whether it's institutional values or personal values. Two is you want to make the world a better place. And three is financial performance. And so, as I said, they're often overlapping. And I will mention the fourth, which is when government gets involved. And there is a forced nature of having to consider ESG, whether you care about it or not. But it's in those contexts of those first three reasons that that Honeytree was born. And I would explain that our approach to investing is that we believe that long-term performance is inextricably linked to making a direct positive impact on a range of stakeholders. That includes the environment, employees, supply chains, customers, and society as a whole. So this is our thesis of responsible growth, which is the idea that stakeholder-governed companies are more purpose-driven, provide more positive impact, and ultimately deliver better long-term performance. So as part of this investment approach and this thesis, we are taking a very select approach to how we invest, and we have industries that we avoid. We also look for positive thresholds that companies can meet, obviously on the financial side of the equation, but also including environmental and social considerations. And I'll make it very easy for you here. We avoid dictatorships.
Thank you very much, Ms. Glick. We've come to the end of your 5 minutes. We will now move to Dr. Ari Van Ash for your 5 minutes or less, sir.
Cher Monsieur le Président, chers membres du comité.
Members of the committee, it's a pleasure to participate in this meeting, and I'd like to thank the committee for inviting me. I will speak as an academic and not an investor.
On extended supply chain responsibility, which studies the efforts by governments and other stakeholders to increase the responsibility of lead firms for corporate misconduct that occur in their global supply chains. The central point I will make is that ending forced labor in global supply chains requires Canadian and Chinese companies to develop sophisticated new organizational capabilities that they currently lack. Creating these capabilities require important structural changes, which should not be ignored in the debates on extended supply chain responsibility policies, but it also has implications for our discussions on investments. So forced labor continues to be an endemic issue in global supply chains. And the committee has already heard testimony that large amounts of goods sold on the Canadian markets are made with forced labor originating from, among other places, China's Xinjiang Uyghur Autonomous Region. You've also heard testimony about the investment of Canadian pension funds in Chinese companies that have been blacklisted by the United States for their complicity in human rights violations. Recognizing these concerns, the Canadian government has followed the lead of several other Western countries and introduced legal frameworks designed to encourage corporations to take responsibility for tackling forced labor in global supply chains and even holding them legally liable for human rights violations. This includes Bill S-211 that was passed last week, which requires companies to report on the policies that they implemented to reduce the risks of forced and child labor in the supply chains of Canadian firms. Currently, there are other bills under discussion which would require companies to adopt mandatory corporate sustainability due diligence. The young age of these extended supply chain responsibility policies in Canada and elsewhere implies that we still have limited information about their effectiveness. So my own research on private governance program suggests that policies which impose a high supply chain liability on Canadian companies will compel critical structural changes in their supply chain models that are costly and require time to be developed. So, academic research on voluntary private governance programs highlights that it is difficult for well-intended companies to rule out labor violations throughout their global supply chains. In private governance programs, lead firms, big firms, generally impose supplier codes of conduct on their tier 1 suppliers, which identify the ESG standards to which they need to adhere and explains the penalty for non-compliance. They next use social auditing to verify suppliers' compliance to the standards and impose penalties if violations are uncovered. To ensure that the standards cascade down to lower tier suppliers, lead firms require their tier 1 suppliers to use the same private governance mechanisms on lower tier suppliers, and this goes on and on and on. So evidence shows that private governance programs work relatively well for detecting and dealing with labor violations among tier 1 suppliers with whom lead firms have long-standing contractual relationships. However, they fail to make a real change among lower tier suppliers with whom lead firms have no direct contractual relation, who are often difficult to monitor by lead firms, and who are sometimes even unknown by lead firms. It is unfortunately in these lower tiers of global supply chains that most human rights abuses happen. Developing lead firm interventions that can prevent labor violations in lower tier suppliers is complicated and remains understudied. However, what is known is that it requires lead firms to develop new capabilities that enable them to improve transparency, traceability, inclusiveness, and ultimately control throughout global supply chains. This includes the development of supply chain mapping capabilities to improve their awareness who is involved in their supply chains and where labor violations are most likely to sprout. It also includes a capability of supporting tier 1 suppliers to improve their monitoring of labor conditions among sub-suppliers and acting upon violations. And it includes a capability of building new partnerships with NGOs and competitors to develop best practices on detecting and tackling forced labor.
Thank you very much, Mr. Ash. We've come to the end of your 5 minutes, but you'll have a chance to add to your comments when you're answering the questions from our members. We'll now go to Ms. Colson or Mr. Garand. Will you be splitting your time?
No, I'll deliver the opening statement. Thank you.
Very good, sir. Go ahead for 5
Bonsoir.
minutes.
Good evening, honorable members of the Canada-China Relations Committee. I'm Danielle Garand, Executive VP and Global Head of Public Markets at the British Columbia Investment Management Corporation, BCI. With me is my colleague, Jennifer Colson, Senior Managing Director and Global Head of GSE. We join you from the traditional territories of the Lekwungen peoples and the Songhees, Esquimalt, and Wasanich First Nations, within which we are happy to work, live, and play.
For your questions and to share insights on our BCI responsibly builds financial secure futures for our clients. We thank you for your patience as we gather this necessary information to give the committee a fulsome and transparent picture of our industry before confirming our appearance. We are based in Victoria, BC, and support 32 public sector clients, which include 11 public sector pension plans, 3 insurance funds, and various special purpose funds. BCI is one of the largest institutional investors in Canada and approximately $215 billion currently under management. BCI takes our responsibility as fiduciaries very seriously. We support more than 715,000 pension beneficiaries and 2.5 million British Columbia workers. We focus on the long term, looking 70 years ahead and beyond to generate sustainable value for our clients. BCI is proud of our level of accountability demonstrated through our unique governance structure as an agent of the BC Crown, including the majority of our board being client representatives and our sole share being held by the Minister of Finance for the province. Mon rôle à BCI consiste à gérer.
My role at BCI is to manage a diversified portfolio of global investments that include index and active management strategies in fixed income, equities, derivatives, currencies, and absolute return strategies. I've been involved in investment management for over 30 years with experience in both public and private assets. My colleague Jennifer has extensive professional experience in environmentally responsible investing and resource management at BCI as Global Head of ESG. Jennifer and her team of 16 ESG experts ensure that ESG is integrated throughout the organization and in our investment processes. Our global ESG strategy involves integrating ESG practices into investment decisions, influencing positive change through engagement and advocacy with responsible authorities, investing in sustainable opportunities, and sharing knowledge to inform decision-making.
Beyond in our reporting obligations and provide audited financial statements for all our investment pools, proxy disclosure for all of our public equities, and annual reports available on our website. We believe taking ESG matters into account enables investors to better understand, manage, and mitigate risk and take advantage of opportunities associated with long-term investments. In our due diligence, we simply do not invest until and unless a complete ESG and risk review is done. There are no exceptions. Afin d'aider le comité dans son étude,
to assist the committee in its review, we proactively filed our investment inventory, our annual ESG 2002 report, and our proxy voting guidelines, which outline investor expectations. These documents are examples of the transparency. Mr. Chair? Mr. Chair? Mr. Chair?
Difficulties, Mr. Garant, and we're unable to proceed with the English translation.
Okay.
So, or with the, I'm sorry, with the French translation. So if you could conclude your remarks en français, that will be, I think, helpful. And speak
Okay.
a little louder too, please, sir.
I will do that. Thank you. Nous sommes conscients que le comité se concentre sur les investissements institutionnels en Chine. Nous espérons également donner un aperçu de notre stratégie d'investissement diversifié mondial qui inclut en partie la Chine. La stratégie de BCI favorise l'investissement en gestion active.
Your audio difficulties now have extended to the English translation, so I'm afraid we'll have to tidy things up here. We'll now go to Mr. McLennan with the Ontario Teachers Pension Plan. Sir, you have 5 minutes.
Good evening et bonsoir. Merci de m'avoir invité.
Thank you for having invited me here this evening. We give a lot of importance to the work of your committee. I will make my comments in English. It's my maternal language.
Ontario teachers to appear before this committee. I value the opportunity to be here today. My name is Stephen McLennan, and I am the Executive Managing Director of Total Fund Management. I've been with Ontario Teachers for 20 years. My role at Ontario Teachers is to oversee the Total Fund Management Department, which, among other things, coordinates the plan's asset allocation and top-down portfolio construction. I would like to use my opening remarks, given the committee's focus, to introduce Ontario Teachers Pension Plan and describe how and where we invest. Ontario Teachers Pension Plan was established in 1990 as an independent pension plan. We are a non-share capital corporation governed by the Ontario Teachers Pension Act. The pension plan is jointly sponsored by the Government of Ontario and the executive of the Ontario Teachers Federation. Together, they ensure the plan remains appropriately funded. Our professional board members are appointed by our two sponsors. Our board oversees the management of Ontario Teachers. Our board members are required to act independently of both the plan sponsors and management, and they must make decisions in the best interests of all plan beneficiaries. Day-to-day activities are delegated to the professional staff of Ontario teachers who are responsible for investing assets and administering plan benefits. As an Ontario-based pension plan, we are regulated by the Financial Services Regulatory Authority of Ontario. As at December 31st, 2022, we had $247.2 billion in net assets. We have been fully funded for 10 straight years and have a $17.5 billion funding surplus. Since inception, we have earned a net fund return of 9.5% per year. We are a long-term investor with an investment horizon measured in decades, and a key tenet of our investment approach is diversification. This includes diversification by asset classes such as equity and debt, as well as by regions, sectors, and time horizons. This allows us to create a balanced portfolio that is designed to be resilient across a number of different economic environments and circumstances. As such, we have a global portfolio spanning multiple asset classes, and at the end of 2022, we had investments in over 50 countries. 85% of our investments are in developed markets such as North America and Europe. The remaining are in developing markets, primarily within the Asia Pacific and Latin America regions. Here in Canada, we invest in assets from coast to coast in companies such as Atlantic Aqua Farms and PEI to Global Container Terminals in British Columbia. In addition to diversification, another key to our investment approach is a keen focus on risk management. Our board, with the support of the executive team, establishes our risk appetite, which in turn guides management actions, including those relating to overall risk parameters, as well as underwriting various types of risks, including geographic and country exposures. We actively monitor and assess geopolitical developments as a core input into the investment process. As part of our underwriting process, we do perform a variety of ESG-related risk and opportunity analysis to ensure businesses we invest in are built for long-term sustainability and success. This analysis is conducted by internal staff with support from time to time from investing partners and consultants. Turning to Asia, we first established an on-the-ground presence in Asia through the opening of an office in Hong Kong, which gave us boots on the ground to manage investments in the region. Since then, we have established offices in both Singapore and Mumbai. Today, while China is the world's second largest economy and Canada's second largest trading partner, it represents a relatively small proportion of assets at 2.3% of the fund. In recent months, as we assess the changing post-COVID economic environment, recent regulatory changes in China, and the continued deterioration of US-China and Canada-China relations, we reduced our investment activities in China and paused further private investments. We will continue to responsibly manage our existing investments in the country, as well as other countries in the region. Merci beaucoup, and thank you. I welcome any questions you may have.
Thank you very much, Mr. McLennan. We'll get to those questions right now, and we'll begin with 6 minutes. Mr. Januis, yours for 6 minutes or less.
Thank you, Chair. Mr. Garand, you represent the British Columbia Investment Management Corporation, or BCI, which invests on behalf of major public sector clients in British Columbia, teachers, university employees, municipal employees, etc. I was struck by the fact that you began your statement with an Indigenous land acknowledgement. I was struck by it because of how discordant it is with the complete disregard that your investments show for the dignity and rights of the Indigenous peoples of East Turkestan. Your company, according to a report from Hong Kong Watch, invested about $35 million in Hikvision as one example. Hikvision is directly complicit in the persecution and genocide of Uyghurs. Hikvision actually has developed ethnic facial recognition technology, that is, cameras that identify Uyghurs and marks them out for particular persecution. So, Mr. Garand, do you acknowledge your investments in Hikvision, and how do you feel about those decisions?
And Mr. Garand, again, move your microphone as close as you can to your mouth and speak as loudly as you can. Thank you.
Okay, let's hope this is working. We do invest both actively and passively, so I cannot speak specifically about this company, but in the broad index that we're using for
I'm sorry you can't speak specifically about that company, because that was my question. You must have expected it coming before the Special Committee on Canada-China Relations of Canada's Parliament.
Are you telling me you're unaware of whether your company's invested in Hikvision? I just asked you to confirm that the information from Hong Kong Watch is correct. Are you invested in Hikvision?
What I'm saying is we invested in broad index replication. So this is what it means when you buy pieces of a broad index, we don't make the specific choices of the underlying company. The index provider does.
So but are the figures correct that you own $35 million of Hikvision stock? I mean, you choose to buy an index knowing what's in it, right?
Well, actually, when you buy an index, it's because you need to get broader exposure and you need liquidity for portfolio balancing purposes.
Yeah,
So
sir, with all
what's
due
in
respect,
the
I mean,
broad
members of this committee know what an index is, and they know why people buy indexes, but there should also be moral principles that underline those decisions. Are you prepared to acknowledge that you're invested to the tune of $35 million through an index or not, but that's not really the point, $35 million invested in Hikvision, and do you think that's acceptable?
What I would say is we're working with the index providers to improve what is in the underlying index. For the benefits of our clients' beneficiaries, we need to have broad investments that are liquid for portfolio balancing purposes and liquidity.
Yeah, but sir, there's a genocide going on, right? Parliament has unanimously recognized a genocide targeting Uyghurs, and Hikvision cameras that deploy race-based facial recognition technology are an instrument of that repression, and I wonder if you think that the people you invest on behalf of, teachers, university employees, municipal employees in British Columbia, think it's acceptable that you are defending investments in a company that's complicit in genocide on the basis that, well, you need to diversify your portfolio. I mean, if you were on my behalf, I would say I would take a slightly less return in exchange for knowing that you're not invested in companies that are complicit in genocide. I don't think that's necessarily the trade-off, but I would accept that trade-off if that's what it was. Do you think the people you're investing for would find this acceptable?
What I would say is we're not very happy with some of the components of the index, and we're doing something about it. But that's
or to divest from the index. Are you prepared to divest from the index on that basis?
Actually, what we're doing is we're engaging with index providers to improve what they put in the index.
That seems to me like getting on the wrong train and running down the corridor in the opposite direction, sir. Do you think your members would find it acceptable that you are to the tune of $35 million investing in a company that's complicit in the Uyghur genocide, and you're saying, well, we ask the index providers to reconsider what they're doing? I mean, you're still putting the money into it, sir. Do you think your members, the people you're investing on behalf of, would find that acceptable?
What I would say is there are issues linked with indexing, and we're active in tackling those issues. There are different ways of doing it. We've usually done engagement. And if engagement doesn't work, there are other ways to deal with it.
Yeah, I think one obvious way would be to not invest in companies that are complicit in genocide, sir. Like, frankly, I don't know how you sleep at night with your complete inability to answer these basic questions.
Point of order.
Yeah,
yes,
go ahead
Mr.
and defend them
Chair.
if you want, Mr. Oliphant.
That is badgering the witness. It is Parliament. It is not parliamentary, and it is outside the rules of the standing orders of this committee and any standing committee to badger witnesses with inappropriate comments.
Just on that point of order, Mr. Chair, I control the time.
Mr. Chair, on that point of order, I don't think you had given anybody else the chair, the floor.
Chair, I'd welcome the opportunity to respond to point of order.
He doesn't necessarily get the chair, get the floor.
Your time is up. We'll continue on, Ms. Yip, for 6 minutes or less.
Thank you to all the witnesses for coming. I know that the hour is late, and we're very appreciative of you coming and answering our questions. My first question is to Mr. McLennan. Is cryptocurrency considered to be a safe investment for Canadians?
Well, I'm not going to comment necessarily on crypto as a broad asset class. I can only speak to how Teachers has been thinking about it in terms of our own portfolio. We've spent a lot of time analyzing it, and for a variety of reasons, at least from an asset allocation perspective, determined that it wasn't going to be an appropriate part of the overall asset mix. And so we would look at it from that perspective.
Asset mix.
Repeat your question, Ms. Yip. Your microphone wasn't on.
Oh. Why wasn't it an appropriate asset mix?
Well, I think that is an emerging part of the capital market space, and certainly has some characteristics that one might think has a place in a portfolio. However, when we did the analysis and looked at it from the context of what are the return drivers and the risk drivers, again, from an aggregate top-down perspective, we came to the conclusion that it wouldn't be suitable from an asset mix perspective. That's not to say that there might not be, or there couldn't be, some interesting activities from more of a business perspective, or from a more direct investing perspective.
Does OTTP have cryptocurrency investments?
We currently do not have. The only investment that we would have in the crypto space would have been our FTX investment that would have been well publicized late last year.
Was there a financial loss on that investment?
Yes, there was a financial loss. I believe we've disclosed publicly that we wrote that investment down to zero.
So, do you think there was enough due diligence to go into this emerging market and your investment?
$95 million US.
Yeah, well, look, we always strive to have the best due diligence in place. We're really disappointed when things don't turn out, and we regret when we lose money in any investment. But I think we also recognize that due diligence need not be 100% fail-safe. And when these issues do occur, we, as a learning organization, take it as an opportunity to improve the process to make it better for future situations.
Thank you. My next question goes to Professor Von Asch. Today, Minister Joly declared the Chinese diplomat Zhao Wei persona non grata. Do you think there will be retaliatory measures against businesses in Canada?
So I'm sure that China will consider how to demonstrate their disappointment with the sending out the diplomats. So I would conjecture that there might be some retaliation.
Canadian businesses in China.
Sorry, I didn't hear the entire question.
Do you think that this will affect Canadian businesses in China?
So it depends how they will be retaliating. I'm not sure how they will do that.
Okay. My next question is to Mr. McLellan. In recent news, we heard that China was barring thousands of citizens and foreigners from leaving the country. Most are due to pending civil matters, not criminal, and not necessarily related to national security. The PRC says they are open for business after COVID, but this seems to give a mixed message. How will this affect financial investments?
Well, I think when we take a step back and think about what we're trying to do from a portfolio perspective, we are a fiduciary. We do have a mandate to earn risk-adjusted returns. And part of that statement around risk-adjusted returns is thinking about the risk profile. And one of those key considerations is that the state of Canada-China relations, U.S.-China relations, and as that risk profile changes, we will look to adjust what type of exposure we'd like to have in the country. And so to the extent that that statement or that issue that you just raised is raising the risk profile or the geopolitical risk, all else equal, we'll look to think about how that's going to affect our overall allocation.
How will this accelerate implementation of ESG requirements?
Well, I think it's when we look at our investment process, we look at things both from a commercial diligence perspective, but we also look at it from an ESG perspective. And so these types of issues should hopefully be picked up in any of the analysis that we would be performing on that ESG side. And so from the perspective of how does this affect our incorporation of ESG, I think it really just emphasizes the importance of ESG in the investment process to ensure that we're delivering investments that satisfy the risk and return profile that we need to kind of satisfy our pension promise.
Thank you, Ms. Yip. We'll now go to Mr. Trudell for 6 minutes or less.
Thank you, Mr. Chair, and thank you to all the witnesses for being here this evening. My question's for Mr. Van Asch. You mentioned in an article in La Presse, it said repression of Uyghurs in China, forced labor. For your T-shirt, this was the title of the article, and you said that businesses are caught between a rock and a hard place if they don't denounce this situation. They will have either problems with the consumers or with the Chinese government. So you were saying essentially that it's impossible for businesses to be completely transparent. How can you reconcile this? How can investment funds, for example, in full knowledge of this, say that they should invest in the businesses? How do you know if there's no child labor, et cetera, et cetera? How is this supposed to work? Thank you for the question. I was speaking about businesses present in China and that had been accused of having used forced labor in Xinjiang. In that situation, they were between a rock and a hard place. Do you have a specific name of a business? Well, at that time, we were talking about Zara, Uniqlo, H&M. That is the context in which that I was speaking to this. Right now, we have much more transparency as to the involvement of our actions, not just in our own businesses, but along the entire supply chain. We look at all these issues, but yes, it's not easy to address this issue for businesses, for many businesses. Well, some businesses naturally are aware and others are not so much aware of what is happening quite far down the supply chain. So for the pension fund, one of the implications is that there's a higher level of risk in these types of situations, and they'll have to be accountable. So reducing the risk is not easy. We've already heard witnesses testify earlier and to speak about the due diligence and what they're doing, but this is due diligence of businesses that they're investing in, and oftentimes those are not the businesses that are employing or using forced labor. It's their subcontractors, and it's hidden. It's hidden somewhere in the chain. So if you want to address these issues, it's important that our businesses have a better understanding of what's going on, but it is difficult to develop this. We had witnesses come here before the committee to say that, oh, it was easy to have full transparency, that everything was public in China, that you could obtain information on everything, and for businesses, all the information on human rights, it was easy. Do you agree with this? Well, it's easy to identify where there's a pension fund that is investing in a business involved in forced labor, but for investors or businesses to identify all the possible cases where there could be a link with forced labor, that is extremely complicated. So I don't agree that it's easy or that you can find information easily using the internet. You really would need to create a relationship with businesses and to ensure that they are providing exact information as to their subcontractors. It's really complicated. Now, as to how the government could act to have greater transparency and so that we would have more access to information, I understand with what happened today, this is not going to help it's not going to help, but do you have any ideas as to how we can facilitate that information is transmitted, that we can know if public funds in Canada are invested in companies that do not respect human rights? Thank you for the question. I think that one thing that the federal government can do, they can do more due diligence. This is positive. It provides information and it forces businesses to do more work. The government can also do something else. A lot of forced labor is extraterritorial in other countries, China, but other countries as well. And if we start to make this type of information public, well, this could be interpreted as being a political issue that could lead to reprisals. For this reason, probably to have a collaboration with other countries, such as the US, would be important.
Expired. We'll now go to Ms. McPherson for 6 minutes or less.
Thank you very much. Thank you to all of the witnesses who joined us today. This is absolutely fascinating for me, and your expertise is very useful. Thank you. So, you know, what I'm recognizing is that what we have here is a very complex economic system. You know, these funds are extraordinarily complex. There are many moving parts, how decisions are made. We heard in our first panel that, in fact, because there is such a size to these investment funds, that they have the capacity to change the direction that companies make, that they could work on in that way. We know Canadians want to ensure that our investments are not being, you know, we are not benefiting from forced labor, benefiting from human rights abuses, environmental degradation, harms to Indigenous peoples around the world. But yet we've seen time and time again where the lure of dollars, you know, we know there is an awful lot of money to be made in the Chinese market with working with Chinese companies. The lure to make money often overshadows or trumps the desire to you know, respect human rights and respect environmental care. So I'd like to start, maybe if I could, with Ms. Glick, and then I'll ask you, Mr. Van Ash, but should Canadians be worried? Should Canadians be worried that their pension plans, that their investment funds are using forced labor or other human rights or environmental abuses? And should there be stronger legislation from the government of Canada and perhaps even the provincial governments? Ms. Glick, I believe you're muted.
Sorry about that. You know, those are difficult questions. I don't know if I can answer them direct head on. I would say that for folks that do care about these issues, and not everybody does, a lot of people tend to, you know, look the other way when it comes to their investments. There's a disconnect. But I would say, to your point, there is an increasing interest and concern about ensuring, for some people feel very strongly about a whole range of ESG issues and are looking to invest their money in that capacity. For those people who are maybe not being educated or are aware of what they're investing in, there needs to be greater education and there needs to be better opportunity to make decisions in that regard. So I do think that transparency is key. And I would point to very quickly that there are certain products out there that have, in particular since Russia invaded Ukraine, which again, another dictatorship, we've seen a lot of money moving to freedom indexes, so indexes that don't invest in countries like this. So there's definitely a group out there that are acting with their money.
Mr. Van Ash, can you tell me about the legislation? Do you feel that the current legislative structure that we have is sufficient? Sorry, Ms. Glick, that was for you.
No, you're still muted, Ms. Glick. There we go.
I would say it's a difficult. All I can say is that if the government of Canada, it's a very complex world. China's second largest economy. There's a lot of interwoven connectivity. Over the years, we have seen where the Canadian government has stepped up on, international conventions and they've taken positions on certain, other countries. And, if there's enough of will to do something, then it can be done. I believe it can be done. But it's definitely, there's a lot of conundrum when dealing with China and all the complexities that we're facing.
Thank you so much, Mr. Van Ash.
So do consumers care? Absolutely. We are seeing with the emergence of ESG investments that consumers and investors care increasingly about these type of issues. I think also that pension funds, as we've been hearing from the different witnesses, also are taking these issues more into account. But of course, there is much more that can be done. One issue, of course, that is important is that investing in China can also be very much related to sustainability and can be very much ESG compliant. So a lot of investment that goes into China can actually help in addressing development issues as well. So that's certainly something important to note as well. Concerning legislation, I think that the trend that we are seeing is going in the right direction. I think that it is good to see that in Canada, in the United States, in a lot of European countries, there is a move to push companies to look further than just what is happening within their firm boundaries toward where they can have an influence on. I think that this is a positive trend. I think we still need to be thinking a bit further about what the implications of this are. For example, if we would go further into making companies liable for what is happening in a supplier 3 steps away, this would be very difficult for companies to address, and this could lead to companies reacting in a way that we might not want to see. For example, would we want to see companies just deciding that they are going to be cutting their supply chains completely out of the least developed countries because it's just very difficult to understand what is going on there? Probably this is not something we would like to do. There is an important role for Canada and other countries to ensure that the least developed countries can get integrated into the global economy. So we need to be thinking very carefully about cost issues, coping mechanisms that companies might be adopting. But I do think that the trend is going in the right direction.
Thank you, Mr. Ash. We now are going into our second round. And I think to wrap things up in time for our in-camera session, we'll go Mr. Hoback, Mr. Oliphant, and then Mr. Trudell and Ms. McPherson, and that will round us off. Mr. Hoback, then to you for 5 minutes or less.
Thank you, Chair, and thank you, witnesses, for being here. Ms. Glick, I just want to quickly go with you on a few questions in regards to ESG. In your fund, ESG is a major factor in your investment decisions. What's your return on investment in your fund compared to other funds that don't necessarily have a heavily weighted ESG factor?
I can't answer that right now. I would say that we are very competitive. I think that we do very, very well. And I have no concerns about our performance relative to those that do not consider ESG.
You'd have a goal still around 10%? Just fair enough? Or?
That's not exactly how it works, but we definitely.
I don't. So I'll move on to the next question.
Yeah.
In the panels we had before, they talked about ESG being a different lens in Canada or in the Western world versus Asia. Do you see that as being quite common in the industry, and is that something that you also partake in?
There's a certain level of transparency that's easier to be had over in this part of the world than it is over there. So there's generally some, different kinds of expectations, also different governance structures. There's all sorts of differences in cultures and how businesses run. I would say that, in my particular case, I can afford to be picky. I have a very specific approach that's very concentrated, and I don't have the same issues that very large pension plans with massive pools of capital have in terms of diversifying their assets. I also don't believe, I believe that investing in dictatorships adds to risk. It's not, I'm looking at it the other way, not that diversifying is a better risk-adjusted return, but rather...
I only have 5 minutes, and
Yeah.
I want to get to Mr. McLennan with the same questions. When you're looking at your fund and you're using your ESG criteria for teachers, does that criteria change based on the country that you're investing in?
No, not generally. What we'll do is we'll look at every investment that we're considering with the same ESG lens. And what we will do, though, is focus on areas by sector or other considerations where you might think that there'd be more material risks associated with a particular characteristic in a sector, for instance. So if it's a heavy industrial sector, one would think that there could probably be more health and safety considerations that you would need to spend a little bit more time on.
And in that sector, for example, it's not that you wouldn't invest in it, you may want more of a premium or more return on investment in that sector versus a sector that has a very simple and easy ESG risk to it.
Well, potentially, I think it really comes down to what is the risks that have been identified, and do we think that company will be able to kind of remediate those risks and or incorporate that into their overall business plan. Because again, I think when we take a step back and think about ESG more broadly, it is really a risk that will impact both the financial returns of the business as well as the overall risk profile of the business. And so we do think with the long-term lens that we need to apply to our investment approach, that we need to be thoughtful around how those ESG risks are going to affect the overall risk return profile of the business. And so it really depends on the circumstances.
And I get that. So you get two companies in the same sector in the same country. One's good on ESG, one's not. What would be the difference if you're to invest in both of them that you would offer that investment at? Would it be a premium of 4%, 5% for the company that is versus the one that isn't? How does we get that value into the marketplace? And then as we look at investments in China, what type of premium would you need in a Chinese investment versus an investment that's similar in Canada?
Yeah, no, I think the interesting question, I think that's a very difficult exercise to calibrate. And so I don't have a specific point estimate that says company X needs this type of return and company XYZ plus needs an extra return premium with a specific number. Directionally, though, I would agree that companies that have less risks, be that ESG or financial risks, would require a lower expected return.
Would you view transparency if you had to mandatory make every investment outside of Canada transparent? You have to identify and say, this is where we've put our money. Would you be objected to that or opposed to that? Would transparency bother you?
Well, look, we'll abide by all Canadian legislation related to reporting, and we'll use that as our guiding light in terms of what we would look to disclose.
Dr. Van Asch, if I pronounce your name, I apologize. Do you think transparency is a tool that's required out of the Canadian sector? I know we talked about legislation, but one of the panelists in the last panel said that's too broad of an instrument, but thought transparency and the social conscience that would come with that would be very adequate. Do you see that in the same lens?
A very brief answer, please, Mr. Van Asch.
So transparency, of course, is going to make it easier to find out what companies are doing. So we always have to be careful that we're not leading to companies having to take coping mechanisms in a different way that has other implications. So, but transparency, generally speaking, can be very good.
Thank you very much, Mr. Hoback. We'll now go to Mr. Oliphant for 5 minutes or less.
Thank you, Mr. Chair. I want two sets of questions. The first one really aiming probably towards teachers' pension fund, and want to dig a little bit into the decision to pause investments, direct investments in the businesses, private assets in the PRC, and what was the process to reaching that decision, and what do you think the ramifications of? And what does that mean? What is a pause?
So a pause is really us pausing future direct investment activity in that country as it relates to our private investing portfolio. The reason for the pause was really driven by our assessment that the risk landscape in China has substantially changed over the last 2 to 3 years. When you think about U.S.-China relations, you think about Canada-China relations, the shifting economic trends in a post-COVID world, as well as some of the domestic regulatory changes that were made in China, those all to us signaled that there was a change in risk profile. And our key mandate, frankly, is to deliver on our risk-adjusted return goals. And so as part of that, as risk increases, we need to reevaluate how much exposure we wanted to have in China from a top-down perspective, and that really led to the decision to pause that particular set of activities.
I'm just wondering whether Mr. Grant from BCI had the same analysis, and whether or not you're considering a pause on direct investment.
Thank you. We actually have made the same decisions at BCI.
Very much. I want to shift a little bit, and it's really just me trying to understand a little bit about the issue of indirect investments and index funds, and how investment decisions are made there, and what kind of perhaps lobbying activity goes on to encourage index funds to invest in certain areas. And I'm thinking about, we look at that we've talked about the U.S. entities list earlier, and we've talked about what companies may be on that in the U.S. How does an index fund, and it may be Ms. Glick that I want to talk to because of your background, how do index funds make their decisions? What is the role of lobbying that could happen? And how do we have transparency when it comes to indirect investments, particularly in index funds, which then may find their way into pension funds or other large public assets?
Actually, I think what would be, more applicable is to talk to their clients. So some of these pension plans work with index providers, and as Monsieur Garon has suggested, he actually is engaging with the index provider. That is in part how indexes can make decisions. I know from an ESG perspective, there's a lot of custom ESGs indexes that can be made, and that is just a client relationship where a client can say, I want to invest in this market or this index, but I need to remove this, or I want to increase this. And you literally customize an index, and you create your own approach.
Really they're not really index funds then? If it's customized, I thought an index fund mirrored, and I'm naive, I don't have background in this, I thought an index fund mirrored the index, but maybe I'm wrong on that.
Well, the indexes all have rules, and the rules, you could argue that nothing is truly passive, but the less rules there are, the more passive it is, in the sense that, if you've just created like a couple of key items to identify market cap and weight, off you go. But the more restrictions you put on it or more parameters, the less passive it is, still considered a passive index. And yes, so you're
trying to understand whether there is surreptitious ways that People's Republic of China is finding investment into, say, North America, into Canada or the United States through indirect ways, through index funds, and whether or not you have some suggestions on how we can monitor that and stop it, particularly when it comes to national security interests. Ms. Glick.
I think I don't have a particular viewpoint on how the indexes can be managed. I think talking with the index firms and figuring out, where
Fund when you're at MSCI.
Sorry?
Is MSCI not an index fund?
It's an index firm. They create indexes, yes.
Mr. Oliphant, you're out of time,
All right,
sir.
thank you.
We'll go to Mr. Trudel for 2.5 minutes or less.
Merci, Monsieur. Thank you, Mr. Chair. Mr. Van Asch, the former ambassador to China, in an article in Le Devoir on March the 9th, 2023, stated that it's more difficult now to conduct business in China with the policies of the Chinese President Xi Jinping. Why would it be more complicated now? Thank you for the question. It depends of the industry. In many industries, I don't think there's as much different. But if you look at strategic industries, such as where, on one hand, there's more questioning around the role of China on the resilience of the economy, and China's doing the same. We know that now it's very difficult for businesses to say, we will conduct businesses with the West and with China. They have to make choices. Sometimes in the U.S., they say that businesses need to choose if they're going to receive funding from the U.S. government. They can't do any transactions that might help the semiconductor sector in China, for example. So I totally agree that in strategic industries that the reality has changed and it's become more complex. But in many other industries, the consumer market, I don't think there's that much difference. We have a witness that said that there was a lot of political instability at the top of the Chinese power pyramid. And Mr. Xi Jinping, since he's there, do you share this point of view? I'm not a huge expert on Chinese politics. There's no election, but at some point there's a decision as to who will become the chair of the Politburo. There's a lot of political issues at play. I think that the power of Mr. Xi Jinping is really strong, and that he will be in charge for the next years to come.
It always does. Ms. McPherson, the last 2.5 minutes is yours.
Thank you, Mr. Chair, and mine will fly by as well, I'm sure. I'd like to ask these two questions, actually, of Mr. Garant and Mr. McClellan. So one of the things that we've been discussing in the House today as we deal with the misinformation, Chinese misinformation within our elections, is the need for sunlight and transparency. So I'd like to follow up a little bit on what Mr. Holbach was bringing up to the committee. You know, I went and looked at some of the websites where we were supposed to be able to get this information very, very easily, and it is at a very high level. It is not at a low level where you can actually see individual investments. How could that be improved so that investors would know? And is that something that would be to the benefit of funds? Like, it does seem to me that it's a little bit more work for you if those who have invested with you, or those whose funds you're managing, don't have the information. It gives you a little bit more coverage. For example, Mr. Grant, it gives you a bit more coverage when you are investing in something that may be very, very distasteful, like the Uyghur forced labor within Xinjiang. So how does transparency work? How could we make it stronger? And is that something that the sector would do on its own, or is that something very much that the government would need to impose upon the sector? Mr. McClellan, perhaps I could start with you first.
Oh, sure. Thank you. Well, look, it goes without saying that we're going to comply with all laws and regulatory requirements. And our current standard is that we actually disclose above what is required by our accounting standards and by the law. You can go to our website and we have a list of material investments. And I think that has served us quite well. I would also just note that the Canadian pension model is the envy of the world, and that's really premised on this independence of governance between pension plan and the government sponsor. And I think we just need to be thoughtful around how additional rules and regulations might affect that.
So when you say that you, sorry to interrupt, but when you say that you would follow the laws, you would be looking then for laws that would increase the transparency, I would assume,
We'll follow the laws as presented and act within those boundaries.
Ms. McPherson, you are out of time. I want to thank the witnesses for appearing this evening, a little later for some than for others out at the West Coast, I suppose. It's almost dinner time there. But we thank you very much for your attention and for your information that you've passed along to us. We're going to break very briefly while we go into in-camera. Monsieur Cormier, you'll have a separate Zoom link to follow. So with that, we'll suspend for just a moment. Thank you.
Thank you.
Thank you.